Hello everyone, how's it going? In this video, we're going to talk about Farmmi, trading under the ticker symbol FAMI. Before today's video begins, if you like my content, please like, comment, and subscribe to my channel for more analysis videos. Over the past few trading days, the price of Fami or Farmmi is currently around 30 cents, which is arguably its lowest point since its inception. Some of the reasons why the price may be that low can go from financial results and short sellers. The interest in short selling FAMI is not necessarily visible on the surface, but based on what Fintel reports, there should be around 50% or plus of interest in shorting Fami when we consider the dark pool. The trend of its share price is also influenced by possible dilutions to raise capital and to purchase more assets in mergers and acquisitions and to expand into medical sector. Farmmi operates in the agriculture sector, namely in different kinds of edible mushrooms. They also recently expanded in the medical field, which is a logical move because the mushrooms they farm do have some medical effects for most part. In terms of its average volume over the past 10 days, it is trading at around 400 million shares a day, which is a lot. This is very significant and demonstrates that there are a lot of interests for the stock. Of course, keep in mind that sometimes penny stocks are frequently traded because the stock is cheap, which will naturally encourage investors to buy large amounts of Fami stock. I think that in terms of what makes the company so attractive and appealing to investors is the small size of the company, and the fact that it is acquiring other companies and assets as we speak, which will give it a boost. Another factor to consider is that other institutional investors, including some of the largest hedge funds in the world, like Citadel, Renaissance, and Virtue Financial, their price of acquisition is approximately between 40 to 70 cents, and this means that right now, price is really cheap compared to what we would be able to buy it for, assuming that the market starts to perceive the inherent value of Farmmi in the months and years to come. Personally, regarding Farmmi, I would recommend an exposure of around 1 to 2%, depending on if you're comfortable with the risk profile of the company, which is, I believe, is high. And if you believe that Farmmi will be expanding and rewarded for doing so by the market. I would also recommend to buy a significant portion of your allocation right now, because the price is very reasonable. Looking at the current environment, I think that we have to be careful with having exposure in the equity market, especially equity market when it comes to international companies, like companies that don't necessarily have operations in the same country where the stock is listed. That goes double or triple for Asia. The market has been predicted to eventually go through major pullbacks or even recessions for more than a decade at this point, after the years of quantitative easing, which kind of guarantees that the stock will go up. Not necessarily because the companies will do better, but really because there's more money available sloshing around. We have to keep in mind that fundamentals is not the only thing that matters in a market, and that very often it doesn't matter at all, right? Ultimately, I think one of the most determining element is the amount of money that is going in a market or leaving the market. In 2020, we saw another big push in asset prices, and this time, not just for the blue chips, but also for the growth stocks. There are, generally speaking, two explanations. The first one is that more money has been printed across the world, and because the economy has been stagnating over the years, the capital then entered into the melting pot of finance, and then ended up buying up share prices ever since. That was the case for many years, but now the quantitative easing in North America is ending, and in Europe, they're now considering to maybe wrap it up soon. In other words, I don't think that quantitative easing will continue to play an important role in keeping asset prices up. For politicians, it may be a good thing. For those already owning them at the current price, not so much. This decrease in new money being printed is partially compensated with the geopolitical tensions across the world, and the more tensions there are, the more money there tends to be flowing to the US, because it is often perceived as the ultimate safe haven for capital from different countries, especially the ones that are currently having, say, turmoils or, social unrests. What this means for the market is that the degree of uncertainty will increase over the next couple of months and years, especially as the expectation for a recession is building up after the party in 2020. I mean, if you think that you've seen what the pullback is with the sell-off from February to May, let's just say that a real recession is going to be exponentially worse than this. Of course, that is to assume that a recession will actually come, right? The recent announcements from the US Federal Reserve about the possibility of a recession, along with the buildup of economic difficulties coming from Asia, also don't really help. Like, all these elements do make me feel that it's very important to keep your positions nimble, to keep your portfolio, I want to say, cash heavy or significant in cash. But of course, don't FOMO out just because there are, dark clouds gathering. Dark clouds have always been gathering. That's just part of nature, really. And I think that we have to keep that in mind and invest accordingly. So about growth stocks, which is the case of Farmmi, it's very important that you keep it cheap and that you buy it early. I think that now is a good timing to buy it early. I highly doubt that it'll really remain at this price level for the long term. And for one simple reason as well, which doesn't have anything to do with fundamental this time, but for NASDAQ companies, very often, if your stock price is too low at one point, you have to delist. And the company will be more than motivated to keep their shares listed on a NASDAQ. That was the case for companies like Bionano Genomics before. So I think that for Farmmi, it's going to be the same music. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.